What's going on, guys? Biggest Bullish Investor here, back with another video. The last time we talked was back in August, so I thought that I would just stop by on this Sunday and give you guys an update on how the portfolio is doing. The portfolio back in August was sitting at $67,461.06. The portfolio is now sitting at $76,839.81. On Friday, the portfolio gained a $1,042 return, or 1.38% return. And then after hours trading, it gained $18.62 for a 0.02% return. For the week, we're up $87.71 for a 0.1% return. For last month, we're up $5,316.37 or 7.43% return. For last 3 months, we're up $4,933.22 for a 6.8% return. For the year, we're up $5,742.63 for 8.08% return. Back in August, we were sitting at a $1,414.75 return for a 2.1% return. We are currently sitting at all-time high for our portfolio, as we have a $15,619.15 return, or 25.5% return. Back in August, we were sitting at a $10,060.40 return, or 17.53% return. Before we go into the individual stocks of the portfolio, we will show off the gains and losses of the overall portfolio. As you will notice, the portfolio has trimmed down some of the positions that I was currently holding. I sold off the referral program stocks that I had, as well as OGIG and Madison Square Garden. And the reason why I sold those positions was I have been heavily buying into Apple each week. I buy a share of Apple. I put about $200 into the stock market each week, and if Apple is trading above my average cost, I'll buy 1 share. If it's trading below, then I'll buy 2 shares. And if it's trading way below the average cost, then what I did was, I think when Apple was went down to, I'm just going to jump into Apple really quick. When Apple was trading around that 107 range, I sold those positions and I purchased extra shares of Apple. So let's start off with Berkshire Hathaway. The last time we talked, Berkshire Hathaway was trading at $210.50. Now it is trading at $227.42. We have not added any shares of Berkshire Hathaway. The total return back in August we had was $3,187.25 for a 13.42% return. Now we are looking at a $5,353.01 return with Berkshire Hathaway for a 22.5% return. Berkshire had just released their 13K on last Sunday, and they showed off the fact that the company is buying back its stock massively. Between BRK.B and BRK.A, it has brought back $9 billion worth of its own company. I will currently not be adding any shares of Berkshire Hathaway. I will just sit back and enjoy the gains. Back in August, this company held a 39.9% weight in my portfolio. It is now sitting at 37.9 percentage of my portfolio. Next is Disney. Back in August, Disney was trading at $130.03. It is now trading at $138.38. We did not add any additional shares of Disney. The total return back in August was $2,302.48 for a 16.2% return, We are now sitting at $3,362.93 return with Disney, or a 23.6% return. Disney back in August held a 24.48% weight in my portfolio. It is now sitting at a 22.92% weight in my portfolio. Disney also had earnings last week, and while they have had negative growth with their parks being closed, with what's going on in the world, they managed to eke out a positive, as they have stated that their growth from Disney Plus, they have 73 million paid subscribers for that platform, which is phenomenal. They are crushing their expectations of where they thought they would be with the growth of Disney Plus, and I expect this company to eventually start to be valued how Netflix is valued, with the amount of growth of services from Disney and Apple Plus. I expect these companies to grow with their subscriber services. So we will continue to enjoy the ride with Disney as well. Now jumping back into Apple, this is the company that we have been purchasing a bunch of. The last time we talked back in August, the company did not do its share buyback just yet. We purchased Apple at $445. Once it did a stock split, we got 100 shares of Apple, and we've just been buying up shares ever since. Apple held a 16.5% portfolio diversity back in August. It is now sitting at 22.71%. We also had a negative $7.75 return from Apple. We are now sitting at a $1,087.86 return, or a 6.6% return with Apple. So Apple, we will continue to buy. Looks like we might hit 200 shares of Apple and then just enjoy the growth. I'm not 100% sure if that's what I want to do. It all depends on where Apple will be trading at once we hit those 200 shares. So you'll just have to stay tuned and see what we will continue to do with Apple. Next is Bank of America. Bank of America was trading at $26.08 back in August. Is now trading at $27.02. I finally stopped being lazy with the company. I'll explain what I'm talking about. As our average cost, the last time we talked, our average cost was $24.36. We had 300 shares of Bank of America. Now our average cost is $23.45 with an additional 27 shares. And what I did with Bank of America was, let's go to the 3-month. I noticed this cup and handle that was forming with Bank of America. So once it hit here, I sold out. It was $24.77 where I sold all my shares of Bank of America. And then the next day, I scooped them up. It says $23.68, but I purchased it at $23.45. So this little V-shaped pattern right here that happened, I sold off at the top, and then I brought it at the bottom. So I was able to get a couple $100 from Bank of America and secure it and lower my average cost in the process. So we will just continue to hold Bank of America, enjoying the dividends that it has given us. We're currently receiving a dividend of about $59 every 3 months. So we will continue to hold Bank of America. Next are our laggards. We are looking at Apple Hospitality now. Back in August, the company was trading at $9.61. It is now trading at $12.37. As the story looks like, we will be receiving a vaccine. As per Pfizer, looks like we might be receiving a vaccine by the end of the first quarter of 2021, and that has sent the the hospitality and REITs skyrocketing. We did not add any additional shares of Apple Hospitality. Our average cost is $16.59, so that is plenty high. Yeah, the loss that we had in Apple back in August was $1,710 and $710.88, for a negative 42.8% return. We are now sitting at a $1,034.71 loss, or a negative 25.45% loss. Back in August, Apple Hospitality held a 3.49% weight in our portfolio. It is now close to a 4% weight in our portfolio. We will hold on to Apple for right now. Like I said, if Apple, the tech company, dips way below our average cost, we may just sell our position in Apple Hospitality and help secure a better position in the other Apple. And then we have Aurora Cannabis. The last time we talked, Aurora Cannabis was sitting at $10.20. It is now sitting at $7.19. They have a CEO. He's a pretty blunt guy. However, I just don't know what to do with this company. I'm just very disappointed in everything that was stated. Everything that glitters isn't gold, ladies and gentlemen. This company, it just feels like there's been lies after lies, and I don't know why I just sat here and let this company. We were up $2,000 when we first purchased the company, and I just sat there and with my I just sat on my hands and just let this company just give me a negative 83.4% return. So we are sitting at a negative $3,612.65 return. Back in August, it was $3,311.65, or negative 76.45%. The story with the marijuana stocks is that with Joe Biden becoming president and everything, they believe that we will get legalization of marijuana in the United States, and that should let these stocks continue to run or have some type of growth. So we'll just have to sit and wait and see. But other than that, that is the portfolio for you, ladies and gentlemen. I appreciate you guys checking us out. I will try to, I know I said that in the last video, I'll try and get on a better schedule and try and pump these videos out. I'm just waiting for some consistency with everything that we have going on. But other than that, if you guys have any questions or comments, just let me know in the comment section, and I will get back to you. Have a great day.